Okay, let's talk about charting the markets because I got to squeeze in a few more things here before we close out. Plus, we got a question about real estate I want to talk about briefly. S&P 500 near record high. The S&P 500, yes, has pulled back slightly, but you can see that the volume here all year the bias has been to the upside. We've seen a lot of nice volume coming in. Remember, there's still $6+ trillion sitting on the sidelines in money market accounts. Those who are either politically motivated, keeping it there until the election, or they're keeping it there for high interest rates or elevated interest rates, and they're earning, they feel it's safer than being in the stock market, whatever reason. But I was looking at some data that showed that money is flowing back into the market from some of these different vehicles, and some people have been out of the market, and we've begun to see some pretty big shifts in that. Now, keep in mind, the uptrend alerts we gave you at the beginning of 2023 and the middle of 2023 were just simply based upon trends. And one of the things that we want to teach you and also, practice ourselves is to not get caught up in the mania of what the media thinks about the stock market and what they think about what's going to happen tomorrow. If you listen to some of these CNBC or Bloomberg, I mean, I can't take it. I mean, I'll listen to a little bit of it sometimes, but I just can't take this. Let me just be kind here. I'm going to be kind. I don't want to be too negative. But the questions that are asked by the reporters are just bordering on asinine questions. What's the market going to do tomorrow? It's like, what a dumb question. Who can possibly answer that question? Or have stocks gone too high? Completely asinine question, right? Because the trend moves until it doesn't, and so there's no way to know. There's no crystal ball, and people kind of tune into these, financial shows because they think they're going to get some sort of crystal ball and somebody's going to tell them the magic answer, and none of that's true. But you can follow trends, and that kind of dummy proofs it, So here we have two uptrends that we called, once in January, once in June, and the market just continues to plow higher, right? When that downtrend comes, you're going to be the first to know. We're going to alert you. We're going to say, look, we got a position downtrend on the S&P 500. And then, now we have a long-term downtrend on the S&P. So you're going to know. You're not going to get from me a whole bunch of, I'm not going to, bloviate on all different kinds of theories. I'm just going to say, look, we're in a downtrend, and there's the volume, there's the price action. Here's what's happening, right? So it's a lot more easy. It's a lot more relaxed. You can think about other things. You don't have to stress out all the time about what everybody thinks about the market, right? It doesn't matter what everybody thinks about the market. What matters is what that price action is doing. We can look at the chart and trust the chart more than we can the news. This 97 to 351 strategy, as you can see here, also just came right when we called the long-term uptrend in June of 2023, and it's remained intact very well. Even right now, the price of the S&P is above the 97 SMA. So we really haven't even violated that. So again, are we getting ready to have a downturn? Your guess is as good as mine. But right now, we are nowhere near a downturn. We are in a level, and in fact, even on the monthly chart, we're still not that overbought, believe it or not, in terms of the relative strength. So we still have, theoretically, you could say there is more upside based upon technicals. Just using that alone, you could say, yes, you could build the case for that. But at the same time, the price action is going to tell us. Here's a reality check here to see this massive uptrend we've been in for quite some time. Look at this. You can find the support here, 3,500 on the downside since the lows of 2009. If the market were to crack and it were to come all the way down to 3,500, which could happen, there could be something could happen, and who knows? Well, you'd still be in this bullish channel, 3,500. I mean, right now we're at nearly 5,500, and so you could come out with a 3,500 and you would still be in a bullish channel. Can you believe it? Isn't that something? Look at that. So, but we are closer to the upside of this. That puts us at about 6,200 or so. There are some calls for the S&P to get to 6,000, 6,200 or so by the end of the year, maybe early next year. Or not the end of the year, I'm sorry, into next year. But, 6,000 or so on the S&P, that's not hard to imagine, considering where we are now. And then the Nasdaq 100, also, this is a little bit of a warning here. These are the kinds of things we look for. Look at that long wick there. Now, that's not a warning that everything's over, although that does sometimes precede the end of a rally. But instead, it's more, to us, more of a sign of a period of consolidation. So this longer wick that you can see right there on the chart, that's indicating that we're going to take a breather here on the Nasdaq 100 more than likely. And that's what we're seeing. This is a weekly chart. Last week we had that near touch of 20,000, right? Nearly, we got right to that 20,000, and that's going to be a bear of resistance because it's a huge psychological area. NVIDIA looks the same. Look at that. That's why the Nasdaq looks the way that it does, because NVIDIA has been very much driving the market to a certain extent. And you can see here this long wick here on NVIDIA. Had this nice rally. Look at that long wick right there. There's another one. You can see that one right there. What happened after that long wick? Well, this is a weekly chart. So after that long wick, you got 1, 2, 3, 4, 5, 6, 7, 8, about 9 weeks before it finally started to, or even you could say 10 or 11 before it actually broke the top of it. So when you get these long wicks on the upside, that usually means get ready for a period of consolidation. So we've got one here, and so we should expect, if we get 8, 9, 10 weeks of consolidation here through the summer, it wouldn't be a surprise at all. But if we do get that period of consolidation, that is completely normal in the middle of an uptrend, do expect the financial media to pull their hair out and to stress you out and to try to convince you that everything is over and Armageddon is right around the corner. Expect it. Walk into it expecting it. Know that. So when you see these long wicks, say, okay, I understand that that's likely a consolidation moment, but I understand that most people don't know what to do when the market isn't going straight up. So they assume it has to go down now. Keep that in mind, that's how neurotic the media is. And so if you do watch it, don't let it mess you up. So anyway, that long wick indicates we're probably going to have some weeks of consolidation. That's completely normal, especially after this kind of rally. You've got to have consolidation along the way. Gold, look at those long wicks. This is what we've been doing on gold. We came up and look at that long wick right there. That long wick indicated that it was going to consolidate. And it did, right? Consolidated. Then we kind of got, this one took a little longer. Then you get another long wick right there, right at a resistance zone, okay? Consolidation, right? Long wick, consolidation. Long wick, consolidation. And now we got some long wicks here, right? And we're consolidating right below those long wicks. So watch, you'll get a nice rally, and then you get a long wick, and then it'll take a minute to figure out what it's doing. You can see that also here in gold, right there, rejecting that 2450 level on gold. We get that breakout above 2100. That's a key area to watch. If you're trading gold miners, GDX trading still just above our 3250 support zone. This is the area we'd be watching. Now, it doesn't mean if it breaks down below that, it's over. But, for those who have been trading this thing and have been doing well, 3250 is the area we'd be looking at to hold. And so far, so good. We pulled back, but not to 3250, just to about 3275. It didn't quite get down there. If you're trading junior miners like GDXJ, it's still trading above its $40 support level. So we haven't got down there. We've gotten a little below 41, but we're still hovering right here at this flat 50. Silver is right here in this zone, which we think is a pretty interesting area right here, where you have this nice bullish channel that's happening, and it's just kind of playing out inside of it, kind of grinding sideways right here, this little this yellow strip here we kind of laid out, which is right between $29.50 and $30. You'll see that there's nice support there at 29 on silver. So silver's just grinding sideways right around that 30 SMA. If you look at SIL, for example, it's still hovering above the $29 support range. These are silver miners, silver miner ETF. And if you look at the juniors, they're hovering above the 1050 support range. So none of these have actually violated to the downside their support areas, which we are following closely, which indicates that we're probably going to see potentially more upside ahead if these continue to hold. And so it could be a nice opportunity. Now look at silver here, though. Look at this particular chart. This is interesting. You'll notice this is a weekly chart. Look at those long wicks. There's a long wick there. It came up, and then it consolidated for what? 1, 2, 3, 4, and then you finally got a breakout on week 5, right? And then you got up here, and now you got another long wick. This one's a really long wick. And then you got another long wick and another. So in other words, what we got here is we got quite a bit of consolidation happening right now, rejecting those higher prices. Physical silver rejecting. You can see up to 33. It's about 32.75, I think, was the peak on silver. So silver could consolidate here for a little bit. It's hanging out at about 29.50 or so. The dollar is right where we had expected it to be. With it back above the 200, we expect it to get up to about 106, and this is the area where we fully expect for it to fail. Lower high, lower high. This is likely going to be a lower high here on the dollar. We're going to get PCE data at the end of the week. That's going to be a real big deal for the dollar. We may get watch for a big move on Friday. Friday could be one of the biggest days of the year. Last Friday was triple witching, and so we had a lot of activity. This coming Friday is the reconstitution of the Russell. You're going to have the PCE numbers come out. There's going to be a lot of stuff. And so I'd be watching Friday. Could be a big day this week. Be ready. But particularly for the dollar, I am bullish on TLT and VCLT. These are bond ETFs. I've been talking about these a little bit. We told you that there was a new position uptrend forming in TLT. Let me open up the software here real quickly, and let's look at TLT here together. I was looking at VCLT earlier. Let's look at TLT here on the weekly, and you'll see this one here. This is a really beaten down T-bond ETF, and TLT here has been really beaten down. I guess you could build the case there. There's a little bit of a cup and handle pattern here playing out. Maybe a cup here, then maybe a handle here. Maybe that's what's happening. But we do have a position uptrend firming, just as TLT is perking up. We got that. There's the tripwire. There's the trigger. There's the confirmation. And we're getting ready to get possibly a new CCI signal, which goes right above the 100 when you get a bullish signal. So TLT looking interesting there. And you can see here 80 to 85 support there on TLT. Also VCLT. VCLT has actually done better. Corporate bonds have actually been experiencing some really big inflows this year, and they're off their lows. $60 to $65 support range. If you look at VCLT, you'll see that it's also in a position uptrend just forming right now, and it's also got that CCI. So getting ready to trigger. So you could have a pretty nice run on bonds higher, especially as we get closer to those interest rate cuts. So VCLT, TLT, those would be my two choices. Remember we talked about natural gas. Here's another chart. Natural gas is doing well. As you can see here, we got down every election year. It's 2016, 2020, and then 2024. We hit that $1.50 area, and then it just ultimately resolves higher, right? And that's what we're seeing already. So we've already seen it double since we told you it was down at $1.50, and we said, well, we could see it go higher. Well, it's already doubled, and we could get more. In fact, for Q1, many people don't know this, but for Q1 of 2024, United States became the largest exporter of natural gas. So interesting there, especially with prices going up. Uranium, one more chart here, and then we're going to look at a couple of crypto charts. Uranium, URNM, this one is back at its 200-day moving average, a rising 200-day. We got that nice 200-day moving average breakout and higher than normal volume. We got a little bit of consolidation after that, then a rally, riding the 50-day. Got this cup and handle that actually delivered a 10% return on the breakout, but It failed. Long wick there, and then it begins to come back down. Now it's at its 200-day. So if you're long or if you like uranium here, interesting that we're back at the 200-day for the first time in a year. It's been a year since we've been at the breakout of the 200-day.